What's up, YouTube fam? Welcome back to the channel. We got a special episode for you guys today because this is one of the first times I've done something like this. Extremely different than everything on the channel, but I'm going to get into it, talk about it, and see what we think and what's going to happen. And I want to hear what you think is going to happen in the comments. So make sure to let me know as soon as you're done watching this video. So with that being said, we're going to talk about why I went from option seller to option buyer. Now, don't get confused. I'm still an option seller, right? Obviously, you look at the Con L position, there's 18,000 worth of collateral in an option sell. You look at this position, 3,000. While you look at these two, I only put, 6, 7, 800 into some option buys. So still majority of my portfolio is in option selling positions. Now, with that being said, when we look at this SPY chart, this is the US 500. There's nothing more beautiful than this. I mean, this is 1 hourly just bouncing, right? The daily looks amazing. Now, I don't want to say that I knew this is what it looked like when I took the trade, right? Because this all didn't even exist, right? This was a flickering candle and this did not exist at all. So, ultimately when I took the trade, we had this. Now, here's the thing, guys. Buying options, right? It's all about you versus time. Selling options is you with time. So the only time it makes sense to buy options is when you can outpace time, right? Now, how is that possible? It's only possible when there's large volatility in the market. So a day like today, we had Jerome Powell speaking. We had Microsoft earnings, Tesla earnings. So here's the Tesla chart, right? As you can see, craziness, right? Here's the Microsoft chart, which is really the only thing holding us down. If this double bottom holds next tomorrow, then SPY is going to fly, because we also had Facebook earnings, which looks ready to absolutely go to the stratosphere more than it already has, right? So I'm expecting tomorrow to be extremely bullish. Now, I didn't have a magic crystal ball, right? It wasn't like, oh, I knew it would be bullish. So I put up an amount I can afford to lose, which was originally 500. And then things caused me to love it even more. So I took a second position, right? Basically, it was just money that I was willing to lose. I was willing to part with the 8,900 that I had invested into this trade. Now, obviously, from what Robinhood shows, I'm still down. But based on where the NASDAQ is headed, right, based on where the S&P is headed, I anticipate, when market opens tomorrow, it will be a good day. I anticipate tomorrow being bullish, and I anticipate Friday also being bullish, because that's how these types of things go, right? It's usually continuations. And these bullish moves, the biggest problem you're going to have is that you didn't get in, right? Because a lot of these bullish moves, they don't even retrace. They don't even give you a chance to get in. The only way to get in is to take the risk. And the only way to take the risk is to be willing to part with the money that you're putting into the position. Now, yeah, you can trade leaps ultimately, right? I took an expiration this week because, I just wanted to not have to risk as much. Like for me, I am an option seller primarily. But when I think there's good gambles, I'm going to take it, right? You can say, oh, this is gambling. Yes, fine. Say it is, right? But if I'm making, if I'm growing my account primarily option selling, and there's days where to me the gamble makes sense. Like for me, right? When you buy an option, you can only lose the option, right? You can only lose 100%. When you sell an option, you could lose, like for instance, this Con L position, I was down thousands of dollars, right? For these options that I bought, I would never go down more than 900. It's physically impossible. So to me, risking 900 on the fact that 4 of the biggest companies, because Apple has earnings tomorrow, and Jerome Powell won't make the market move up. To me, risking 900 on the idea that it will, right, was worth it, because let's just say the market doesn't go up, and let's just say this move never pans out the way I anticipate, which I do anticipate these highs being taken out and ultimately even further. I anticipate potentially new highs this week, truthfully, right? Maybe I'm a raging bull, maybe I'm crazy, but let's just say it doesn't pan out, then yes, I'm willing to part with the 900. But let's just say if I sold options and it didn't pan out, there's obviously possibilities I would have had to lose a lot more. Now, with all that being said, there's a time and a place for everything. And I think 90% of the time, it makes sense to be an option seller. But on rare, very large volatile events, I don't mind sprinkling some money on some option purchases, because you can put a couple hundred. If you're making thousands of dollars selling options, or you have a large bankroll, you're making money selling options, and you want to either buy leaps or even occasionally buy some same week, some gambles on what you believe. Like for me, right, it's very similar to a sports bet where, in my opinion, the market flying up or it flying down today was a 50-50, right? So in sports betting terms, it would be a minus 100 or a pick 'em, right? Ultimately, I believe we were getting a 50-50 when it comes to options. However, you can make a lot more than 100%. So to me, it's a 50-50 chance I'm right. And if I'm right, I can turn 900 into a couple thousand. And if I'm wrong, I lose 900. To me, that's a gamble you should be taking right now. Again, this isn't an option purchasing channel. This isn't an option buying channel. It's an option selling. So majority of the time, I will be selling options because I do believe majority of the time you're better off being a seller. Now, part of the reason also why I chose to buy options this week was because when I was looking at it from the world of an option seller, and when I say option seller, I mean someone who would have sold covered calls, I didn't really see a strike price that I was comfortable taking, right? So what does that mean? It means that from my perspective, we were going to take out all of these. And again, if you sell options long enough, right, you will always eventually get beat. When you're getting beat, it's because someone who bought options is winning. So 90% of the time, right, you might win 49 out of 50 trades as an option seller. And, sometimes you have to understand it just makes more sense to buy. And usually it's going to be when there's chances of high volatility. Now, again, leaps is a different story, right? But then I would have had to put up $10,000, right? 20,000. So for me, this was like a quick gamble. I'm willing to lose 900, and if it works, I could flip it into more. Listen, there's a side of me that wishes I got next Friday, right? But I still feel very confident with this Friday. I feel very confident the next 2 days are going to be bullish. Let me know what you guys think, right? Obviously, I took this trade. I talked about it yesterday. This isn't I told you so after. If it doesn't play out, you'll know I took it. And if it does play out, you'll know I took it. And just so you guys know, I don't intend to close this until, at some point Friday. So don't worry, because if it does fly up, I'm not taking profit. And if it goes to zero, it goes to zero. So let me know what you thought, right? Let me know what you think of what I'm doing, of this trade, of the market today. It was a crazy day with Tesla, Microsoft, Facebook earnings. But we'll see what happens. At this point, the job is done. I'll be sitting here and watching for the next 48 hours. I hope you guys enjoyed this video. I hope you learned a lot, and I'll see you guys tomorrow for the next one.